Hi, it's Chris Rowe, and I'm here to talk to you today about the Tycoon U options chain. In fact, that's the wrong introduction. I'm here to change your investment life. I'm here to show you a little secret, a little trick your investment pro doesn't want you to know about. And I should know, I worked on Wall Street for a long time. I'm here to take away 70 to 80% of the risk that you are taking right now when you invest in stocks or ETFs. And I'm here to show you how, with just two simple steps, you can increase the amount of money that you make when you're right, while at the same time dramatically reducing the amount of money that you'll lose when you're wrong. The Tycoon U options chain that you're looking at is just a simple tool that you can use in order to do that. Now, before I get started here, I just want to direct your attention to the bottom right hand corner, just below where my cursor is. You can see there's a bunch of buttons that you can click on. You can click on one of those buttons, it'll expand your screen so you don't have to watch this through the small screen that you're looking at right now. All right, let's get into this. I told you I would show you in two simple steps how to find the right option. Number one, entering the stock symbol. I think everybody can handle that. That's Microsoft MSFT. I'm clicking the get quote button, and you're going to get an options chain. Now, I only picked Microsoft because I was speaking about it earlier today, and I'm not bullish or bearish. I have no opinion. That's not a recommendation. What you get is an option chain. You can see there's a whole bunch of different options to choose from. Most common question I get is, how do I know which is the right option to replace my stock with? That brings me to step two. Step two is you click filtered. Now we've set this up so that we can filter down to the options that are most suitable to replace a stock position. So after you click filter, you scroll down a little bit and you can see that there are a lot less options on your screen. On the top here you see Microsoft stock, and on the bottom you can see that there's not many options. There's the January 2010s, April 2010s, and January 2011s. I'm going to go immediately down to January 2011. They give us the most time before expiration, 501 days before expiration. I'm going to pretend we want to hold on to Microsoft for just a couple of months here. I'm still going to go out to the January 2011. Now, one very important thing to look at, you can see there's a C and there's a P. Same thing up here, two P's and two C's. The C's stand for call, the P stands for put. We're going to focus today on the call option because the call option trades higher when the stock trades higher. A put option trades lower when a stock trades higher. It has an inverse relationship with the stock. A put option will trade higher when the stock trades down. So if I were bearish on Microsoft, I'd be looking to buy these put options instead of going short the stock. It's a lot less risky. If you do it right, it has bigger reward. I'm going to show you how. Right now, we're going to focus just on call options. So there's only one call and one put here. We're going to look at this call option, and it's trading at about $6.20. Now, the reason the filter is so important is because different options will do different things based on the fluctuation of the stock. So what I've filtered down to is just the options that will act the way I'm about to explain to you. And let's get into that right now. We said Microsoft is at about 24.62. Stock owner owns 500 shares of stock. If that stock owner wants to, let's just say, realize the same reward if the person's right about the stock trading higher, while at the same time not so excited about taking the losses that the stockholder has to take when you're wrong, what that person might want to do is replace this 500 share position with an option position. Sell out of the 500 shares, you've got $12,310. Now, with that $12,310, you're going to put some of the money into an option and the rest of it's going to sit in cash. We're going to buy 5 of those option contracts we just looked at $6.20. 5 option contracts represents 500 shares. Now, we're going to buy 5 option contracts at $6.20. That's going to cost $3,100. Now, that's our investment. Instead of risking $12,310, we're risking $3,100. Maximum downside risk. If Microsoft trades to zero, your maximum risk that you could possibly lose is $3,100. The rest of it goes in cash. Since 9210 is sitting in cash, no one can ever take that from you. No matter what Microsoft does, that 9210 is safe. Now, maybe Microsoft won't trade down to zero, highly unlikely, but over the last few years I think we've proven that anything can happen. It could get cut in half. It's trading, at 24.62. If it trades down to 12, this investment of 12,310 is going to go down to 6,000, cut in half. Most you'll lose here is $3,100, and the 9210 will be sitting in cash. All right, let's take a quick look at how this strategy works. Let's do a quick comparison. If the stock moves higher, we said we're going to hold on to Microsoft for a couple months. Let's say in 60 days Microsoft trades up 10 points. The option we chose is going to go up $8.81 approximately. Again, it's a hypothetical. If Microsoft trades down 10 points, this same exact option should trade down approximately 535. Again, when we're right by 10 points, up 881. When we're wrong by 10 points, down 535. Same thing if the stock moves up by 5, we make 418. Down by 5, we only lose $3.33 per option contract. That's a great win to loss rate, a great risk reward ratio that we have. Stock owner obviously makes 5 or loses $5,000 with a 10-point advance or decline in the stock. We would make $4,405 or we'd lose $2,675. That's great. When we're right, we make $4,405. When we're wrong, we lose $2,675. Now, same thing over here. Stock moves up by 5. We either make $2,090 or down by 5. We only lose $1,665. Great risk reward ratio. But I told you that I would not only show you how to make more when you're right than you lose when you're wrong. I told you I'd also show you how to make more than the stock owner made when the stock owner was right, while also losing less when you're wrong. So here's what we're going to do. When we sold 500 shares, in this case, we bought 5 option contracts to represent 500 shares. This time, instead of investing $3,100 into options, we're going to buy an additional option contract. We're going to have 6 option contracts at $6.20. Remember, that's where it was trading. We're investing $3,630 and we're putting the rest in cash. Leaving the rest in cash is critical. Okay? That's the way to keep 8680 safe. $8,608 is going to stay safe as long as it's in cash. Microsoft could trade a zero, nothing will happen to this money. The most you'll lose is $36.30. Now, let's watch the comparison in terms of dollars and cents. Stock trades higher, we make $5,286. Stock trades lower by the same amount, we lose $3,210. So again, stockholder has a different scenario. Stock's up 10 in a couple months, stock owner makes $5,000. Stock down 10 in a couple months, stock owner loses $5,000. Again, we either make $52.86 or if we're wrong by 10, we lose $3,210 approximately. Same thing with other fluctuations in the stock. The righter we are, the more money we make than the stock owner. That's another story. But stock's up 5, we're going to make $25.08. Stock's down 5, we're going to lose $1,998. That's the relationship that we have when we choose the right option, and that's what the filter that I've created is going to give you. Now, here we took 500 shares. We replaced it with 6 options earlier with 5 options. The only thing that we put at risk was 3,630 instead of 12,310 that the shareholder has at risk. We sold this. We got 12,310. We put most of it in cash and some of it in this option. And these are the kinds of returns we get if we're right. This is the loss we have when we're wrong. Why do people trade stock? Why would someone trade an ETF knowing this information? Well, now you have this information, so maybe this is going to change the way that you think. A lot of people are scared off by options because they heard about people losing tons of money in the market. But that's because they over-leveraged themselves. That's because they chose the wrong option. I already showed you how to choose the right option. You click filter. Now I'm showing you, do not over-leverage yourself. Keep this money sitting in cash. What a lot of people tend to do is they get greedy. They buy 20 options. They take 12,310 after selling out of 500 shares, and they buy 20 options. But that represents 2,000 shares. Now that's awesome when you're right. But when you're wrong, you can lose everything. Now you can do that if you want. I can't stop you. I'm just telling you there's much better ways to make money. Now you have zero in cash. You bought 20 options. You took all this money. You plugged it all into options, $12,400. You even added $90. No money's in cash. No money's safe. Microsoft trades down, a significant amount and you lose all your money. Now if the stock is up 10, stockholder's going to make 20%, $5,000. Option holder is going to make $17,620, well over 100% return on the person's money. That's awesome. But when the person's wrong, you lose $10,700 instead of 5. And that's most of the investment that you had to begin with. All right, same thing when you lose 5 or make 5. You can either make 8,360 as opposed to 2,500, or you can lose 6,660. Again, the risk reward ratio is great. You make 17,620 or you lose 10,700. That's still great. But again, you're using too much leverage and you don't need to do that to make money in the market. 2 major ways to make big money in the market, and I'm going to show you both. Number 1, You do what you're looking at right now and you over leverage yourself, and you're lucky that you're right. You put your family's livelihood on the line, you mortgage your home, you go crazy, and you multiply your net worth in just 1 year. Maybe you're right, maybe you make a lot of money, and maybe, just maybe, you're not so greedy that you keep doing it, instead you cash out. But most people won't do that, and there's smarter ways to do this. Don't invest in 20 options. Don't over leverage yourself to the hilt, because you can lose big money just like you can make big money. Here's a smarter way to do it, okay? Here's the way that the stock or ETF owner is going to trade. If the stock's up 10 points, you make 5. If the stock's down 10 points, you lose 5. So this stock can trade up 10 and you make 5, you're at 17,310. But then it can lose 10 points, you'll lose 5, you're back down to the 12,310 that you started out with to begin with. So a lot of people do this. Investors make money in the market, but then they give it back. And then they make money again and they give it back. A lot of the people watching this video want to choke me right now because this describes you. There are some people that this sounds very familiar to. And what happens is you start out with 12,310 and you end up with 12,310. The way to trade, if you're using the stock replacement strategy and you're using the right options, is make more when you're right and lose less when you're wrong. Here's how it looks. Stock moves up by 10, you made 5,286, you're at 17,596. Stock moves down by 10, you lose 3,630. This is just a hypothetical example that I made up here, okay? We're talking about something where, you have, $5,286 of a gain and then lose the same and make the same amount every time. Of course, you'll make different amounts of money, but you'll make more when you're right and you'll lose less when you're wrong. So to illustrate the point, I drew this, and you can see that you start out with 12,310, you end up with $19,004 with the stock trading up 10, down 10. 2 steps up, 2 steps back, so on and so forth. At the end, you're up 54% on your money. That doesn't even include the fact that with all these gains, you have more money. You have more money to invest in more options. The bottom line is you'd make even more than 54%, but I thought that this was a good example just as a starting point. So now you know you don't have to use enormous amounts of leverage in order to make money in the market. Just when you're wrong, you're not going to be as wrong. And when you're right, you'll make a little bit more than the regular stock or ETF trader makes. Now you have the right tool to do it. You have a filter that'll bring you the right options. Not all options act this way. Don't make the mistake of thinking all options in the option chain have these benefits. Certain options have these benefits. They're called deep in the money options. They have deltas that are over 70, and you don't need to know all that. All you have to do is click the filter button and you're going to get the options that have that relationship to the stock. You never again have to ask, which option should I trade? The further out you go in terms of time, the more conservative it is. Here we chose 501 days left. The bottom line is you don't need to over leverage yourself. Now you know how to find the right option, and you know not to over leverage yourself. There are other tools that we're going to bring you. There's a tool that we're going to come out with, unlike anything anybody's ever seen. It'll show you how to know when an option's overvalued or when an option's undervalued. It's a tool that's a proprietary tool. Some of these tools that we come out with, we're going to give to listeners of the morning GPS call for free. Others, we're just going to, we're going to give it only to the Options GPS members. And what I'm showing you right now, by the way, is just Options 101. This is easy stuff. Any good option trader knows this. And there are tons of other tricks that we have up our sleeves on how to reduce your risk and increase your profitability enormously. So we're going to hold your hand. We're going to make it nice and easy for you to do. And before you know it, you're going to know options better than most brokers and most financial professionals out there. Okay, we have more tools coming out. I hope I've helped thousands of people avoid massive losses. Hope you're not going to be taking as much unnecessary risk as you've been taking leading up to this point. I hope that I have helped thousands of people turn their wealth into fortunes. This is Chris Rowe at Options GPS Tycoon U.